In today's video, I'm going to share with you how I'm outperforming the markets with TSLY, which is the Yieldmax covered call fund on Tesla, or synthetic calls, whatever you want to call it. It has about a 65% dividend, and it helps us earn over $150,000 per year in dividends at this channel. Also beware of spam. I do not sell anything except my time and e-guides. If I do offer another service, I will at everyone in the Discord chat room, where there are almost 1,000 members now pursuing the FIRE lifestyle. They can assist you with the questions that I can't answer. And FIRE lifestyle stands for Financially Independent Retire Early. So yes, we are earning over $150,000 per year in dividends, and our performance shows that we're still beating the market for the year. We're up fractionally. We're up about 0.6%. So even though we're only up 0.06%, we're beating the S&P, and all I care about is that we're in line with the indexes, okay? The NASDAQ is down 0.45%. The Russell is down 5%, and we have some growth. We have OARC and TSLY. And so even with growth, even with Bitcoin, we're outperforming, okay? We outperformed in 2023, and we aim to do the same in 2024, all the while living financially free out of our brokerage accounts. This is the most important thing, okay? For tips on dealing with a potential crash, because I've been getting tons of comments on this, see my How to Not Blow Up Your Account video from Europe. Okay, we're on vacation and still defended from a market drop and covered shorts nearly at the bottom, which I share daily on Discord. This is the kind of attention you get from me when you're on Discord during market crashes and during the rights offerings in Cornerstone. Ask anyone who was there. I traded side by side with them during the October crash, and we still outperformed the market for the year. If you need help, by the way, living the FIRE lifestyle, email me for my e-guides at akintodd48@gmail.com. The first thing you need to consider when owning TSLY is the position size, okay? You can't have it as too large of a position in your portfolio because it's only about 1% or 2% of the indexes, okay? You'll see here that Tesla is a top 10 holding. Here it is. It's about 1.75%. So you can have some Tesla in your portfolio, a good amount, okay? And I've pared back the position recently because we've been having some weakness in Tesla. I plan to buy back more Tesla soon. But my margin debt of $130,000, if you're new to this channel, this will be paid back in less than a year because my dividends of about $180,000 right now should more than cover this. Plus I have about $50,000 to $60,000 in bills. So I'll still pay back all of my debt by the end of the year. Then I'll be left with all these dividend paying assets to myself, paying monthly cash flow for life. That's how you live the FIRE lifestyle. Okay, you have to have dividends to qualify to banks for loans, not just personal loans, but housing loans, car loans, however you want to live freely in this world. You need dividends, not trading gains or even Bitcoin. So that's how I do it at this channel. That's what the FIRE lifestyle is all about. The second thing you need to be aware of with TSLY is its maintenance, okay? When you're living the FIRE lifestyle, you have to watch your maintenance levels. TSLY is 50%. So view margin maintenance requirement, 50%, okay? That means it sucks up half of my equity. And when you're living the FIRE lifestyle, you're trying to always live out of your available withdrawal. So even if you're not using margin like I use, you want low maintenance names because that's how you keep your available withdrawal high. If you need help understanding maintenance, that's in my volume 3 margin e-guide. So available withdrawal, you need to be able to withstand over 20% corrections in the market, which I can do. Plus, you have to be able to withdraw from your account. Okay, I can withdraw out of my debt. I don't care. You can do whatever you want with your margin debt. Some people buy houses with this. You can buy cars, clothes, shoes, whatever. Okay, I travel the world using this margin debt. Okay, I also sell options here to lower my margin debt, but those have been covered in other videos. So you need to understand the maintenance for TSLY. You need to understand your position size for TSLY because it's about 2% of the index of the S&P. And again, you're always just trying to go with the indexes when you invest in life because no one can really beat the index over time. 90% of fund managers fail when trying to outperform the markets. Also, indexes help shield you from volatility. So you need to make sure that you're largely with the indexes. TSLY is only a portion of my portfolio, a small portion, so it's not going to affect me on down days. That's how I'm outperforming in the market. Today, we're down $5,000, yes, 0.87%. But look at the indexes above. The NASDAQ's down 1.17%. And the S&P is down 0.68, so we're right in between the two, which I always like to say is my goal here, okay? I want to get a little bit more growth than the S&P, but not so much growth where I have total NASDAQ exposure. The third thing you need to be aware of, okay, is that the dividend is so large that it compensates for my risk. So I'm not worried about what TSLY does, okay? Even if TSLY falls Okay, we're down 13%, and we were just up in TSLA a few weeks ago. We nailed that thing right at the bottom. That and QQQ. If you remember when I was in Europe, we made videos on Tesla when it was around the 200-day moving average. So I was buying here aggressively, even below the 200-day moving average. And we took it to about these levels, 250, where you saw old resistance here, and I was trimming at those highs. Okay, if you need help understanding technicals and charts like this, that's in my volume 2 e-guide. So this was an easy buy, okay, and it was also an easy sell. Once you broke below the 200, you wanted to lighten up on positions. And so I'm looking at adding to Tesla again. This would be support 200, and this is old support here as well, and this is old resistance 200. So I'm looking to add at around the $200 area, okay? And in the meantime, I have a little bit of a short on, okay, because we did break that 200-day moving average, so that means that you're in a downtrend. But again, support was close by, if you noticed that when I was showing you the chart. So I have a little bit of a short for Tesla, TSLS, just $500, just in case, again, something catastrophic happens with Tesla. I'm not bearish on Tesla by any means. And then when we get to around $200, I'll sell this short, okay, and then I'll buy more of Tesla then, okay? So essentially, I'll cover that TSLS short, and I'll buy more Tesla, okay, when we're around 200 a share. So one way you also offset Tesla risk is by staying in the indexes, like I've said a couple of times in this video. Cornerstone has Tesla, so does Defiance, so does FEPI, I believe. I'm not sure, check the holdings of FEPI, but I've made that a larger holding of mine because it's indexed somewhat. So if you stay in the indexes, you're going to do fine. Cornerstone, I have about 400 grand, and that's where I park most of my cash because it is a 4-star fund. And regardless of what people think about Cornerstone, it outperforms the market over the last 10 years. See my video on that. But you just have to time this around its rights offerings. Okay, even if the dividend is declining and the price is declining, it doesn't matter. You have to learn how to time it around its rights offerings. That's how I really level up in my account. Okay, I've doubled in Cornerstone over the last few years. So if you need help playing Cornerstone, that's in my volume 4 e-guide. Stay indexed, okay, to offset risk from these Yieldmax plays, and also be aware of overlap risk. Okay, if you have Tesla, be aware of it in these other indexes like Defiance, Cornerstone, and FEPI. So that's how I'm outperforming the markets with Tesla. Okay, I'm staying indexed, but I do have Tesla. I have a good amount of it. Okay, I have Tesla, but I'm managing my position size. Okay, I've been trimming back in it since we broke the 200. I'll be adding back to it soon. I'll close my TSLS short out when that happens. Okay, I'm understanding that the dividend is going to cash flow my losses regardless. All that we need is a reverse split. Even if the stock price goes to $2 a share, I don't care because Yieldmax will do a reverse split. Okay, I've emailed them before and they said reverse splits are possibilities, and many of my clients who talk to them and invest money with them as well have heard the same thing, okay, that they will do reverse splits. Okay, so as long as there is a reverse split happening, all right, then you're just going to keep cash flowing your investment, okay? So just keep in mind that the position size should match what they are in the indexes, and even that can be a lot with a stock like Tesla. It has a lot of volatility. Again, if you need help doing what I'm doing, email me for my e-guides at akintodd48@gmail.com. When you buy all of my e-guides, you get free access to the Discord chat room for life, where we alert you of the Cornerstone rights offering announcement. And again, we have about 1,000 members there pursuing the FIRE lifestyle who can answer your unique questions about your brokerage account, because not all brokerages have the same maintenance levels. For, let's say, a Tesla, Interactive Brokers or Robinhood might have lower maintenance for a Tesla or a Tesla, but they don't have the special drip for Cornerstone. And that's how I really get ahead with Cornerstone. Cornerstone is a 21% dividend paying fund that also drips its dividend down at the NAV every month for free money every month. So keep that in mind about Cornerstone. But again, time that around its rights offerings. Beware of all closed-end funds. You have to time them around their rights offerings, but they should be welcomed. You should want rights offerings because you can level up your account with those. And if you like the video, click like or subscribe, and I'll talk to you soon. Thanks.